morning if you're in the US, good afternoon if you're in Europe, and good evening if you're in Asia. Welcome to a webinar. It's been a while since we've done one of these, but we felt we've done some great research and we have some great guests today. So we wanted to have a live discussion on the future of our industry, particularly around business services and transformation, and have some of the protagonists of this industry who have been a big part of it over the many years of growth, have been good friends of HFS and myself personally, and I thought many of you would love to hear a bit more from my two guests. So maybe without further ado, I'll ask you, Tiger and Katie, to introduce yourselves. Tiger?
Well, thank you. And yes, we've done many of these, and it's always a pleasure to do it in this format with you. Tiger Tyagarajan, President and CEO of Genpact, have been in this industry as it's evolved over many pivots. And I think, Phil, you capture them very nicely in your various articulation of the various pivots of the industry. Now based in London, and really glad to be joining this discussion.
Great. And this is
Thanks,
Katie Stein, also with Genpact. And Phil, can't wait to get into the discussion and hopefully get some questions from the audience. I lead strategy for Tiger here at Genpact. And Tiger said he's been through many pivots. I've been here 6 years and I've seen many myself. And so the industry continues to evolve and iterate at a rapid pace, and look forward to talking about maybe what's next.
Well, this is great. I think I first met Tiger around 20 years ago. So we've been through so many pivots, we probably don't even know where we are anymore. But Tiger actually is probably known as one of the founders of what is modern day business services today, in his role at Genpact. So he was too modest to himself there, but I think a lot of people will be very excited to hear from him today as well. And where we see things going at such climactic times. We've also completed a terrific study on the future of the industry. We worked with Tiger and his team on this, and we substantiated this with lots of HFS research. So this is a free of charge market impact report, which you can grab a copy of our website. We'll share, go to URL, and we'll share a copy with everybody who's registered today. So thanks for that. So let's talk a bit about how much everything has changed. And, you know, when we look over the last 3-4 decades of our industry, you know, we can see many iterations of moving from, you know, shared services through to, you know, the original offshore outsourcing to, you know, where we are today with much more, you know, conditions of digital outsourcing, shared services, etc., as we look at the future delivery. But we're now at a point, I think, where we can look at what are the big things that have driven massive change over the years. And as much as we love to not say this, most enterprises tend to do things reacting to things versus planning ahead. We try to plan ahead, but usually it's big events in the industry which make the difference. And the first one was the 1995-ish time when the internet came of age and enterprises globalized. You know, this was a massive, massive change for how we did business globally. It was also a huge driver for global services, shared services, offshore delivery, everything. It really started then to shape the way it is today. The next big trigger, I think, was 2008 with the Great Recession. That really did shift the mindset into how do we truly take advantage of global labor and global talent to do things faster, cheaper, you know, more effectively than ever. And this was really the beginnings of offshore services, offshore business services, and offshore IT and digital. So I think the 2008 trigger was the one that saw, you know, the big IT services firms like your Infys, Wipro's, Cognizant's, Accenture's really grew massively during that time, and they're still growing. And then we saw, you know, some of the leading business service firms like Genpact as a big example here. You know, Accenture Operations is another one. You know, they really grew heavily from this period. And then we believe we're just coming to the end of the latest trigger number 3, which is really the impact of inflation, particularly wage inflation, the unavailability of particularly low and mid-cost talent. It's hard to get talent these days. We're seeing in our research that many enterprises are looking more at third-party partnering. And if you look at the deal pipelines in the industry right now, there's a lot of first-time outsourcers looking to make the move, that sort of thing. But this combination of recession, of inflation, of talent dearth, of the need to move fast is really creating this third trigger. And, you know, as an analyst, I've never seen a time that with so much uncertainty. There's a lot of hope, there's a lot of uncertainty, there's a lot of shining lights, and there's a lot of areas for concern as well. But just to pull some data, this is a survey that hasn't even finished yet. We got this data 2 days ago, covering the Global 2000, looking at macro and environmental factors that are adversely impacting organizations today. And the big 5 things that are coming out loud and clear: cybersecurity is leading the way still as the biggest concern, data breaches, the need for the ISO 2701 compliance, privacy risks, you know, the ability to just store and work with customers and suppliers and your employees in this market is getting very, very difficult. So cyber is number 1. We're seeing big issues around supply chain disruption. You know, some of that was caused by the Ukraine war. Some of that's been caused by the pandemic. Now it's caused by, I think, decoupling of globalization and many different issues that are making it difficult to get your goods to market, services to market like you could before. Inflation is rearing its ugly head. It's not moving down as fast enough as we would have liked, particularly in the US, where we saw record job growths in January, February as well. Looks like there's very high job growths again. So while it's great for economic booming, it's terrible for inflation, and that's got to come down because it really is driving concerns amongst businesses, amongst CFOs, and we're seeing belt tightening and decisions taking longer as a result. Changing consumer expectations, it's really hitting certain industries. If you're in the banking space today, everything is free. People don't want to pay for anything anymore, so you have to figure out how to deliver cheaply and with growth. If you're in the healthcare space, mental health is no longer a taboo topic. So a lot of people are demanding services around mental health issues, for example, as a result of the pandemic, which is changing the need for skills and doctors and delivery and that sort of thing as well. And then the other one is attrition of staff. That's really starting to become much bigger of an issue than it was even 6 months ago. And those 5 things are really combining to hit this third trigger hard. Other things like getting staff back to the office is a bit less of an issue now. I think we're figuring that one out. Even recession isn't so much of a concern. It's more inflation for many enterprises at this point in time. And unfortunately, things like climate change and DEI have dropped off a little bit in the last year. A lot of it may be because of concerns and prioritizations elsewhere in the business. But this is the state of global business today. And to give you a flavor of what's happening in the sourcing industry, this is another study that hasn't been published yet. It's great publishing data that hasn't been published yet, but here we go. We asked enterprises across the Global 2000, this is over 500 of them, what they were doing with their IT and sourcing budgets. And you can see here, a few are sticking with their original forecast, that's around a third, but the rest are all either reviewing their decisions, reducing their spend, they're putting things on hold, they're going through a cost reduction exercise. So only a third of these enterprise contracts right now are actually staying the course. So there's a lot of change, there's a lot of things on hold, there's a lot of disruption. It's an interesting time if you're in a company like Genpact, because you'll have a ton of potential clients out there, but the speed of bringing them home and the dichotomy that they're facing with with risk and with cost is really slowing things down as well. So it's a very interesting time if you're an enterprise who's desperate for help, or you're a provider which wants to keep growing and wants to keep investing in their clients. And then you can see here, this is IT budgets. You can see last year we saw an increase in IT budgets of 11%. This year, that's already down to about 4 or 5%. You can see that budgets are coming back in. That's not even including inflation. So, there's less money to go around. Belts are tightening. This is a difficult year for many enterprises. Let's not sugarcoat this. The need for third-party services to drive and help and support has never been more pronounced. And we're calling this a digital dichotomy. We are in an unprecedented situation where enterprises want cost savings, they want pre-inflationary prices, but they want it fast, and they want innovation as well. So how do you save money and get innovation, get all the things that you need to be successful at the same time? It's a big challenge. If you're an enterprise ops leader or IT leader and you don't know how to run an autonomous exercise or an AI initiative today, you're toast. You've got to understand this stuff. You've got to get real, get quick. You know, this isn't 10 years ago where we were struggling to do outsourcing. This is how do you transform your business and do it fast and do it at cost? And, you know, this drives us to thinking around the autonomous enterprise. And I'll share a bit about this, but if you're a leader today in an enterprise, you need data. You need data to be successful. You need to understand what's happening and make decisions fast. If it's your supply chain, if it's your customers, if it's your internal operations, you need data, you need it fast, and you need to have a team that knows not just your processes. It's not just about end-to-end process anymore or workflows. This is about interactions between machines and people, people and people, machines and machines. You need to have a digital audit trail of everything that's going on in your enterprise to get data you need to make decisions to be successful. And I believe that this isn't just about machines making decisions. I think this actually drives power into the people who are making those decisions, because your machines, your AI, your automation, your service provider, they will provide you with data. You're the one who needs to know what data it is you need, and you need to act upon that very quickly. And you need to have infrastructure that can house that data securely in a robust fashion, so you can access it without silos. You can do it fast. You can do it rapidly. You need to have automation that you can trust. Your employees trust it, your partners trust it, your customers trust it, because if it's just lots of brittle, patched together machines and RPA and things like that that can't scale, it breaks, it doesn't scale, it's not secure. You need to have a trusted, scalable automation capability to make that happen. Because ultimately you need AI that is finding patterns in your data. You need to find patterns in your data so you can base decisions quickly and rapidly and trustworthily. You need that quality, you need it quickly, because ultimately you need to have a robust governance capability that is able to monitor and manage all your key decision touch points across the enterprise, because that's what it's all about. When a decision is made, why are they made? How do you make them fast? How do you keep refining your data to be effective? How do you keep refining your processes, your people, your talent, and everything to move things forward? So I'd like to throw, based on some of this as well, a question out to maybe Tiger. You can kick this off. But what are the current triggers you see impacting your enterprise clients, both maybe positive and negative at the moment?
So Phil, actually in your slides, you teed up a number of the things that we are seeing, both in terms of what enterprises are saying they're facing, and in terms of their response, and in terms of an attempt to try and get to what you have called the autonomous enterprise. So the 4 words that I would call out that our clients and the enterprises that we see are clearly dealing with at a meta level is 1, volatility of all kinds. I think it's impossible to think of a time when almost anything in the world changes at a cycle time that is far more rapid than ever before. Demand, supply, rules, where am I going to get the next customer? Everything is changing so rapidly that you can't plan for 1-year, 2-year timeframes. Cycle times are much shorter. Second, therefore, agility and the ability to predict and respond actually is going to be a winning formula for everyone, and everyone is thinking that through in their industry. Third, that means you need to connect the front to the middle to the back with a digital thread. And I know you call it the one office in HFS. That digital thread allows information flow at basically the speed of light. So it's instantaneously available when there is a change or a signal that gets detected. And that's digital. And the fourth is data. At the end of the day, people are realizing that the true moat that anyone can build around their business is the ownership and the use of data that they have and no one else has. Data that then allows you to build insights, to build predictions. I mean, everyone talks about AI, but the real use of AI is how do you use it every day to predict the next decision that allows the human and the machine to interact continuously. So in the search for dealing with volatility, with agility, at lightning fast speed of information flow and the use of data to build insights comes the need for partners. Because no longer is it about, I'll do it all myself. I need to do it fast. I need partners. I need people who've done it before. I need to bring that in. So that's driving our industry. And I'll conclude with two things. We're seeing a bunch of really smart enterprises saying, I want to protect my long-term strategic imperatives around these topics. I'm doing a transformation agenda. I'm driving digitization of my middle, front, and back. I want to protect it. I want investment dollars. Where am I going to get it from? I want to cut back on costs of all the other things that I do. And I want it now because I want to take that money and put it in here. So we're getting business here in helping drive change and here in driving cost to fuel that change. Katie, you want to add anything to what I just said?
I think it was super comprehensive, Tiger. So I'll let Phil keep moving.
So do you think our stability is ever coming back, or it just seems to be getting more and more complex as we progress? Or do you think this is like a one-time period where we're having this global assault on everything that we once knew as stable?
I'll jump in there. I think this pace of change is actually our new reality. And I think that it's not just the pace of change. I actually think that what businesses are struggling with is keeping up with that change. And so this comes to, while the cost and the complexity is all increased, actually your slide, Phil, earlier illustrates how the cost of prediction has decreased. And so I think for all of us, it's how do you harness the prediction or the power of prediction, which the cost of that is coming down for the enterprise, in order to be more agile as we have more volatility. So stability will not come back in my mind, but we can actually harness it. We can harness our information better to be able to proactively respond as opposed to reactively respond.
Okay. So the smarter we are, the more nimble we are, the more effective we are, the more we can move on a dime to do this. And hey, we all managed to move our entire businesses to remote locations in 3 weeks, right?
Yeah.
Yeah.
But yeah, it's absolutely right. I mean, there's a decoupling of supply chains I've seen where you have to make very, very quick decisions on markets and products and things like never before. And being prepared for what's coming down the road.
Yeah, absolutely.
So let's talk a bit about the industry that we've all grown up in. And we put out a thought on this. No one's officially relabeled or branded what happened to what was originally BPO, but until about 2010, we call this, for the sake of argument, old school BPO, but this was all about cost savings and efficiency. It was about how do you report data, how do you enable with tech, how do you lift and shift, and how do there was a joke that BPO used to be all the stuff you couldn't put in an ERP that needed to be done cheaply and fast, but that's really what it was. And then we had this period 2010 to 2020, God bless it, we did a lot of great pontification. I think we envisaged what good looked like and where we could get to as an industry, but things moved very slowly. There weren't a lot of triggers to get away from the cost plus approach, but data did move to decision-making support. We've seen real process experts emerge. We've seen much more emergence of technology as a productivity tool. Lift and shift came more, fix it and lift and shift it, et cetera, et cetera. A lot of talk around SaaS, streamlining BPO, these types of things. And then finally we get to where we are today, which is this, we're calling it, the big hurry. It's about, discipline that's built in. It's about the accessing of scarce skills, data being used as an asset, all sorts of things, full convergence of IT and business operations. I mean, some companies are barely seeing a distinction between the two, and the providers become a much more of an orchestrator and the provider of data. Ultimately, you need data to be successful. That's ultimately what you need. And all the stuff that goes on to get to that data, that can happen behind the scenes. Do you really need to know every single generator that produces your electricity, right? It's a big issue on, how can we shift the needle from where we came from, what we knew about and where we're going. So I'll flip this over to you, and maybe Tiger, you want to kick this off, but what is your vision for the next 5 years of this business services ecosystem based on everything that we've come through?
So I'll kick it off, but then I'm going to turn to my strategy head to actually articulate this even better than me. We actually last early part of last year, actually late 21 and early 22, worked on our Blueprint 2026, which was our 5-year vision, exactly the way you described it. And we revealed it to our investors and the street and our customers and clients in June of 2022. And at the core of that, I would say, is all the things that we've just described, which is how do we build an organization that is truly a partner in the strategic journey of our clients as they navigate what I think Katie rightly called a world of high volatility that we don't think is going to change because we think that's a new normal. Part of the reason it's a new normal is that in a highly connected world, any tremor that's felt in any part of the world for any reason is felt everywhere. So given that tremors happen every day, every second, somewhere in the world, the whole world continuously feels it. So this is going to be a world of volatility forever, and therefore agility forever. So our 5-year game plan is, having chosen the industries that we serve and having gone deeper and deeper into building expertise in those industries, in the processes and data that sits in those industries that give our clients competitive advantage in those industries, having then worked on a bunch of technologies that we have built partnerships with and brought them into a range of end-to-end services that we orchestrate for our clients, both in terms of building and designing and implementing it for them. And sometimes they'll run it in a very different way. And at other times, they'll turn to us and say, why don't you guys run it for us? So we've thought about our business as data, tech, AI, and digital operations. Today, that business is 45% data, tech, AI, 55% digital operations. Data, tech, AI growing at 15% plus, digital operations growing at 6-7%. The total company, therefore, growing at double digits. And over time, data, tech, AI will probably become more than 50% of the business. And our whole thesis is that we will deliver outcomes for our clients. We'll also orchestrate commercial models where we get paid based on those outcomes. Today, we are about 14% of our business is paid on outcomes. We're on a journey to 20-25% of our business being paid on outcomes. Katie, why don't you jump in and add some more to that original framing?
Absolutely. So, Phil, I think Tiger touched on a lot of the points, but one of the areas that I always think of as the future of the industry is around evergreen transformation. So think of what we just said, which is there is no stability. We're in a constant state of change. Customer expectations are shifting. Supplier networks are changing. And our clients are stuck in the middle of this, candidly. And so what happens, it's about service providers in the business services ecosystem acting as that orchestrator to bring visibility and transparency that does 3 things. Number 1, it pushes that end-to-end thinking, the upstream, downstream changes. Number 2, it highlights as systems start to degrade, as processes start to, lack the agility that we need to be successful. And 3, it signals where the ecosystem is starting to find friction. So this is very much a different stage of our journey, one that was about securing the foundation, leaning the processes, digitizing the processes, to now really being centered upon orchestration, leveraging the data we can now harness from the enterprise to do those 3 things that I talked about. And I think, therefore, providers who have the domain context or the business context actually are the ones that can help our clients the most as they harness technology, data, AI, and process together.
Yeah, and Phil, one last quick one I'll add, because you use the word ecosystem. Actually, if I were to look around the world, we've used the word ecosystem inside the company a lot in the last 5 or 6 years. The only other person we have found outside of Genpact who use that word a lot is you and your team. And we are big believers that we are in an era where transformation cannot happen unless it's an ecosystem transformation. No enterprise can say that they're going to drive transformation without actually penetrating the walls of their suppliers, the walls of their customers, and the walls of their partners, assuming they've already penetrated the walls of their employees. But that's something we deeply think about, because how good is your data, but for the fact that it's actually good when it comes in from the supplier or it comes back in from the customer.
Yeah, so that means that a provider needs to work across different components and players in right across the value chain of that industry to start piecing the pieces together, because then you'll get to know your customers better, your customer suppliers better, and then you can start to deal with them as well. So if you're dealing with a high street pharmacy, a life sciences firm, a biotech, a pharmaceutical business, you can start to the FDA. You can start to piece together that whole ecosystem across the value chain and pull them together and become, it can almost become an orchestrator of these systems, because you're providing the one thing they all need. So we talked a lot about, what do we call this industry, moving forward? I think it's an industry that sort of evolved with many different names and labels over the years. So I think, BPM about 9-10 years ago now was a term I think NASSCOM came up with around business process management. But I believe it's become a lot more than that now. It's process, it's technology, it's data, it's change, it's people. I mean, what do you guys think when you look at your business and what you want to, the industry that you see yourselves in? I mean, how do you view that these days when you talk to your clients?
Yeah, I'm happy to jump in. It's funny, I talk to my teams about process or operationalizing insights as critical. I mean, that's actually how you get to speed and escape velocity. But the industry started oftentimes with taking a process and leading a process. Now imagine you're one of our clients and you're in a space that we spend a lot of time in, which is financial crimes. We talked about the cost of doing business going up, which is the regulations are getting more intense and the number of false positives continue to escalate. So it's just, in essence, as we all understand in the industry, more and more transactions you're looking at, more and more false positives means more labor if we approached it through just the process door. But when we look at the data we can capture and we look at the technology that we can use, as opposed to coming through one door, we combine and integrate these together. The answer to that problem wouldn't be to go through each false positive and try and sort through it as an exception. It would actually be to use machine learning to understand and predict whether that false positive has a high rate of risk. And if it doesn't, containerize it, stick it in a cooler, right? Leave it there. Next month, come back. If you see another false positive in that same customer, now you go back to the cooler and you pull it out. So it's actually eliminating work using these technologies and data, embedding that then into workflow, which is where process comes in, so that you have, as you said, the lineage, Phil, and the transparency to, in this space, highly regulated, show the regulator what's going on. And it informs back to your prediction models, again, a higher rate of success in understanding what is actually true and false. And so I think it's very different in terms of the approach where process and operationalizing these components is absolutely critical for our clients, especially at scale and speed. But data and the ability to use that data is changing the way we work.
Yeah, no, completely with you with the whole data piece. And, we start to look at relationship maturity. And this is, I think, key to where the industry is going. And I think a lot of relationships today are still stuck in what we call effort-based relationships. It's about time and materials, focus on cost and efficiency. Around sort of 30% of relationships are now shifting into this performance-based model more, where we do see more gain sharing, more performance pricing, more focus on driving business outcomes for clients. And then eventually what we're talking about ecosystems, an area of purpose. So how can you work with your clients and your suppliers to find new areas to work together that can drive shared outcomes and shared benefits for both parties? Because some of the deals I see today on the table, they're not 3-5 year deals. These things are going to be 10, 20, 30 year engagements. They're so complex. So surely that builds in a different type of decision making when you look at the business you go after. Another thing I wanted to share was we ran this study with NASSCOM last year, and this was 300 companies running BPM engagements. And we asked them how they would rather pay for these services. And this will blow your mind, but 2/3 would actually prefer to pay for performance or data quality. Only 1/3 actually would continue paying in the old model of numbers of people, numbers of time and materials. So, why is there this dichotomy? How can we generally move the business services model from effort to performance? I know you've made some, benefits and ideas in your, Wall Street statements that you're going to move a certain percentage of your clients onto outcome-driven models completely. But I mean, how do we ultimately do it? And how do we even get them to purpose past performance?
Yeah, so I think, Phil, that's I guess some of us in the industry and some people who watch the industry and analyze the industry and predict where the industry is going, such as HFS, have been talking about this for actually many, many years. We've been pushing the agenda for many years. And at times, it's almost felt like trying to push a stone uphill. What I would say is there is a rolling stone that is now beginning to gather momentum, finally. And it has many aspects to it. One of them is everyone is getting aligned to outcomes. There is a degree of confidence on being able to measure those outcomes in a reasonably clean and simple way, rather than spending too much time and effort and being contentious about it. And then being able to orchestrate contracts that actually align goals and commercially reward each other for delivering those outcomes. So I can see that momentum really build up. Having said that, here's the other interesting phenomena that we should watch out for, which is what you said, which is a number of enterprises are beginning to look at partnerships and outsourcing and things like that for the first time in the history of the enterprise. It's a little flabbergasting to think that way, because your chart started in 1990, and now there are enterprises waking up. Well, the good news is that shows how underpenetrated the market still is. Now, when a brand new enterprise starts the journey, we find it more difficult on day one to convince them on a commercial model that's outcome-based. They want it, which is what your chart is also saying, but ultimately they don't contract for it on day one. But here's the good news. They all know that they want to get there faster than the others. And therefore they say, give us 2 years. Let's actually start the journey, and then we'll sit down together and recontract it, which actually we are doing in many cases. So I think the train has finally left the station.
Interesting. And does it take more C-level conversations to make this happen? Because a lot of these relationships get stuck in procurement or departmental areas where it's, I've even seen quarterly pricing emerging. And do the conversations have to be driven up to the top of the organizations?
Yeah, I mean, there's no question. I mean, let's actually go to one of the core issues. If you're talking to a supply chain leader and you're actually convincing the supply chain leader to build on outcomes and pricing based on outcomes, but sometimes those outcomes are benefiting the sales leader of the company. So the supply chain leader is saying, I don't know how to pay for this. The sales leader has to pay for this because he or she is getting the benefit. So the only person who can broker that conversation is their boss. So you have to go higher. In every one of these cases, there's zero chance of getting outcome-based commercial models unless you go to the top of the house.
But I think, and I would agree completely with Tiger, but Phil, one of the things that I'm seeing, and you talked about this earlier, which is breaking functional silos, creating joint accountability. I think the last few years have brought to the top some areas where data services providers can support clients that aren't your traditional SG&A cost plays. So you mentioned Tiger space like supply chain. I have a client right now where the top leadership team all collectively hold an objective in their scorecards around the success of the implementation of a technology and certain key metrics around that. Why is that important? Because now it's not fragmented. It's not, the supply chain leader having to work with the CIO to align. They all are holding a common objective, and we as a partner can align to that common objective. And therefore we have a shared set of goals, a shared timeline, and we can structure our contract around that to make sure that we can collectively be successful. And I'm seeing that more and more is actually CFOs and our customers are saying, this is existential. If we don't fix, for example, our supply chain, we cannot meet our commitments to the street. It's just not feasible.
Yeah, great point. Yeah.
So a lot of questions coming in around education and talent. So I'll get onto this topic now because we had some data that we presented recently, and this went out to 1,800 employees of service providers. This was particularly during the height of the attrition that we were seeing at the end of last year. And we wanted to get to the bottom of what was happening because it was hurting the industry, it was hurting some client relationships. And we asked them, would you like to feel more challenged in your current role? Absolutely, right? Close to 90% kind of claim they're bored. How many would accept a job with a competitor, a similar job, for a 30% pay hike? quite a lot, 54%, fearless to move. A lot of them, would you find a job as good elsewhere? You know, do you think you could break out of the norm? Yeah, a lot of them think that's not a problem at all. We're not particularly loyal. The one element that I think is very encouraging for our industry, more encouraging than anything, is that we asked them if they were passionate about business services, and is it because of the difference they can make to Global 2000 enterprises? And this is where we see 90% of employees within these providers, and you guys were in this as well, we'd covered 16 of them, they see a ton of potential. So how do we do that? We need to build an industry that, you know, is sexier, it's more exciting. You know, I was reading somewhere that services is like the #5 choice of industry in India today, behind tech, and you know, they also want to go to startups and other types of firms. So how do we generally make this industry more exciting for the best and brightest, so we can really build a talent supply chain for ourselves?
Yeah, I think part of the answer lies in everything that you just put out there in that chart. The good news is the bottom, which is there is a feeling amongst the talent base in the industry that actually they can make a difference and they'd like to continue and be passionate about the industry. I think as an industry and as Genpact, our job is to articulate that one of the big joys of working in our industry and in Genpact is you can actually use all these new technologies that are coming out every day. I mean, let's talk about large language models. You know, people have started talking about large language models only since December of 2022. So it's as fresh as it can be. The fact is that one of the best places to actually see what you can do with large language models is the kind of services that we offer our clients. At any given point in time, as we speak today, we probably have 50 experiments going on of using large language models in our services to find a way to add value to clients, while making sure that privacy, security, and all of those are taken into account, which is not easy. So at least we're thinking that through. So creating that excitement in the younger population coming into the workforce, number one. Number two, then providing them the skills and the tools and the learning opportunity, because, you know, 2 years from now, there's going to be something else that's going to come in, which is different from large language models. Are we prepared to teach our people and provide them the opportunity to learn and then apply that in their service, in their industry, experiment, try? I think that's the joy of our industry. Multiple industries it serves, multiple clients, global, trying to drive change. I don't know what other industry actually provides that opportunity. I think it's our job to constantly explain that and show that. Katie, you have a perspective on that?
I think you talked about, always my first perspective is our colleagues like to be part of innovation, and the programs we use like Data Bridge or Tech Bridge, teaching them to drive small transformation innovation in everything they're doing every day, using those technologies is key. The second, though, that I didn't hear you mention, Tiger, that I always think about is what industry do you have the opportunity to say, you know, today I work for Google and tomorrow I work for Morgan Stanley. And that actually is the nature of the data services industry, where our colleagues are working with some of the largest global brands, some of actually the most forward-thinking disruptor brands in their industries. And so if you connect the first point about they're driving innovation, and you connect to the second point of they're part of a much larger brand that's driving disruption in their industries, I think that's a very exciting proposition. And it's for us and our customers or our partners to jointly communicate that to our colleagues.
Okay, and I got a question that's come in, which I think is very appropriate with this, is, you know, we're trying to get folks back to the office, we're trying to build more collaboration. What do you find you're having to do differently as an employer with your management teams, the way you manage your teams and train your staff and things? What are you doing differently today than you were maybe 5 years ago?
So I'll start, Phil, by saying that we've always, as a leadership team, right from the early days of the pandemic and then to thinking about the world post the pandemic, have had a view that there is no one size fits all, a standard cookie cutter answer that is the right answer. So we said, our answer is not going to be, everything is going to be remote. We thought that was a wrong idea. Neither was our answer going to be everyone has to come back to office. We thought that was an equally bad idea. So we think about the world in three buckets. Bucket one is where people come to a common place, let's call that the office, where they innovate together, they share ideas, they actually do workshops, they do value stream mapping, they do prototype building, and they do that for a couple of days and then go back to whatever they were doing, to a remote, wherever they were working from, and then keep coming back. So come back with a rhythm and a purpose. And when they come back, they are doing things together rather than individually in individual rooms. So that's cohort one. Mm-hmm. Cohort two is the other extreme, where because of the kind of work that is done and the kind of industry that you serve and the regulations that you have to deal with, some types of work, fortunately not a very big percentage, but some percentage of work has to be done always from an orchestrated office environment. And that will require 5 days a week being in an office environment. And then you have people in the middle, a couple of days a week. So we've actually divided up the world, divided up the workforce, divided up the services and the clients that we serve into those three cohorts. And then we actually tell our managers and leaders to actually orchestrate that. We believe that 100% remote with no human interaction is a long-term recipe for failure, because you don't have learning, you don't have sharing, you don't have all of that. At the same time, I think we are losing all the benefits that we learned in the pandemic of being able to work remotely when there's no need to come to an office, just because you come to the office and then you sit in a room and do calls. Why do you need to come to the office? So we think the world is an orchestrated, flexible world with teams coming together for a purpose in an orchestrated manner.
Good stuff. I have another question, and it's going back to the conversation we were having just earlier about outcomes. And it's, how do we ultimately get over barriers for getting to an outcome-based model? Is it confidence, trust? Is it parity of commercials? What is it that you find is the big block that's stopping enterprises make that bolder shift?
Katie, you want to go for that?
I think, look, we've been on this journey now, and I think about where we've had the greatest success initially. We've had many different attempts, and some have done better than others, but the greatest success for the industry started with things that you can clearly measure. So transactions, moving away from labor to transaction-based pricing, which is the beginning of getting to, a different type of commercial models, was the first step, because it is easier to measure. It's easier to quantify and come to an agreement between two parties. Then you get into areas like sourcing and category management, where again, you can measure hard savings that can be delivered. I think what that all signals to me is that to get to this outcome-based nirvana in our industry, it's about us defining frameworks with our clients around how we'll measure collectively the objective we're driving towards. And it's different by area, whether it's inventory management, whether it's growth in ad sales. We have to pick those spots where our clients have control over the outcome, the client who's signing the SOW, and that our client can with us collectively measure it. I think otherwise they become very, conceptual, and clients struggle to think about how that will come back in the end to their objectives and their scorecards and their P&L. And so that's what we've been working through as a company, is how we find those spots where we can put clear metrics and measurements around it, how we can build a baseline with our clients, and then how we can continue to iterate quickly with them in order to manage those commercial models.
I think you have a great point around letting the client have some element of control. I think that's very important, because if they don't have that, they're not going to do it. Give them some control, they get confidence, they get clarity, and that's when the magic happens. I think they worry, they feel control if they're a legacy client and we're getting our 200 FTE a year. They feel control there because they get these little green lights that they hit and they know what they're spending, blah, blah, blah. And how do they maintain some control, which is important? You're a customer. You want to feel like, if this sucks, I can get out, right? If I rent an apartment.
Phil, it's a super important point. And we're talking here more about constructs of, the commercials, but even a topic like experience. We've been working in a space such as record to report. and saying, okay, everyone says they want a better experience for their business partners in the retained organization. How can you give the retained organization some control over defining at a granular level? What would better experience look like? Because then we can measure it together and we can actually take some of the noise that happens. It happens within a company, it happens with partners, out of the equation and come back to those fundamental design principles about what did they want higher quality in? Was it number of days? Was it measure of quality of, attributes? What is it? And that is also, Phil, giving control to our business partners so they can help us define that.
That's right. And if they're demanding pre-inflationary wage rates and innovation at the same time, I don't think there's a choice but to start having this conversation. It's not going to be possible. You can't provide those same 200 FTEs at the same price that they were getting 4 years ago, unless you want to lose money. So it's a good point. So let's finish up with some predictions around what's truly going to happen in the next couple of years. If we're totally honest about this, looking at the current state of the markets as well as what do you really expect the next 2 to 3 years to look like for the business services industry based on everything that's happening today?
So I think in the 2 to 3 years is a good horizon because there's a short term. I think in the short term, we've just talked about all of the complexity and cost and challenges that businesses are facing, their own inflation, the war, interest rates, the cost of capital being more expensive. And so I think that in the short run, we're going to see a boom in the industry of both what we've known very well, which is programs that can help stabilize clients' base, build better foundations, and give them operating leverage to reinvest in their businesses. So to me, that's just a fact, and we're seeing it in our pipelines and bookings. The second is, I think Tiger talked about this, which historically the industry may have been more oriented towards, call it areas of the business that were non-core or considered more back office. And I actually think that over the last few years, we've made huge strides using data, technology, and AI to illustrate how the scale of a partner can play in the middle and front office. And that's where we're seeing hyper growth in terms of clients coming to us and saying, look, I need to grow. I can manage my enterprise clients. How can you help me with your scale and your ability to have better client segmentation, manage the long tail for me? Or in supply chain, I need to deliver to my customers. I'm managing my large supplier base, but I'm short because of supply chain fragmentation pieces or parts from the long tail of suppliers. How can you help me manage that? ESG coming into scope 3. How can you help me dive into this issue and manage it? All these things are things that enterprises are set up somewhat rigidly to manage their most priority activities, their highest priority clients, their highest priority suppliers. And I think this is a time for us to leverage all of these technologies to truly achieve third-party scale to help our clients now expand the parameter of how they can grow and thrive.
And Phil, to add to that very interesting and important dimension that Katie called out, again, in the 2 to 3 year horizon, there's something that we have started seeing finally, because we've been talking about it for 10, 15 years, we meaning Genpact. But I think it's beginning to really resonate dramatically all of a sudden is I think we're going to find a lot of mature enterprises that have kind of been there, done that in outsourcing and partnerships and technology, come right around and say, actually, you know what? We've always been looking for scale technology. In reality, we only need so much scale. We don't need this much. We need enough scale. What we really need are, do you know how to use the technology? Do you have people who understand how to use the technology? It doesn't matter which one. Let's pick SAP to S/4HANA journey, or ServiceNow implementation, or Salesforce implementation, or moving everything to AWS in the cloud. In every one of those, don't parade me 30,000 people who understand the tech. Can you show me 1,000 people who understand the tech? Can you guarantee me 30 of the best people from there? But more importantly, can you show me the 5,000 people who use the tech in supply chain, or in underwriting for insurance, or in claims, or in sales and commercial effectiveness in the marketplace for small businesses, and on and on and on. So the coming together of technology chops with an understanding of the industry and the domain and the process and the data is finally, I think, beginning to rise. And therefore, we talked about it in our earnings call, so this is not new information, but all of a sudden our technology pipeline is growing, filled with people who say, we want your tech chops combined with the domain and data.
Yeah. Yeah, no, I know exactly what you're talking about. And, we've seen laid bare that clients want more business contextual, heuristic skills, less of the bread and butter IT. And how do you produce those? And I think it's taking smart kids from college, training them up. These people don't just appear by magic, right? You have to train them. You have to get people who've done this and really get more into the how. Very interesting. So in the remaining time we have, I'd like each of you, if you could make if you had one wish to change this industry for the better, you can do one thing, whatever you want, what would it be? So maybe Katie, you want to kick that one off?
Wow. I think if I could do one thing to change the business and IT services industry, what would it be? Candidly, I think it's a journey we've been on at Genpact, which is to actually eradicate the word FTE from our conversations. I think only then is when we'll actually get into the grittiness of solving what you talked about, Phil, which is how do we move towards more purposeful relationships? How do we move towards what accompanies those, which is greater outcomes? And I think that for our clients, this is super critical because it's only then that we will find the solutions that actually help their business perform well beyond operating leverage. And so for me, it would be just to eradicate FTE from everything that we say and do as an industry.
We'll just delete it.
And Phil, along with that, I would say everything we spoke about in the last hour goes back to building truly deep, trusted, transparent, honest, aligned goals relationships. And in the world of more and more AI and prediction models available for everyone, the real differentiation for the industry is going to be a realization that actually that true culture of meeting of the minds on a long-term basis, with true trust between everyone in that relationship, it's an ecosystem. The faster the industry gets there, the faster the participants in the industry get there, the better, because technology is going to be available for everyone to use. Then it's a question of how can we build trust to drive value faster?
Okay. Is that your wish?
Phil, what's your wish?
What's your wish?
Oh God, no one's ever asked me that one. My wish for this industry, more women in leadership roles. There you go.
That's a good one.
There you go.
That is a good one.
There we go. You guys set the example, right? So
that is a good one. Really good one.
Good. So this has been fantastic. I think we've had a lot of questions that have come in, but I think we've answered most of them with the way that we've gone around this. And this has been a very good level set on where we are as an industry and where we're moving. It's been great hearing from you guys, Tiger and Katie. We should do this more often, but I think everybody on my behalf, we've had a very large number of people dial in for this. So I hope they've got some value. I certainly did. And it's been a very rich conversation and I can't wait to keep this moving.
Thanks a lot, Phil.
Thank you, everyone.
As always, you cover a full spectrum. Thank you.
This is great. And we'll have a recording of this available pretty soon. You'll get it on our website. We'll put it out on LinkedIn. And we'll also make the paper available that we've all written as well, which is touching on a lot of today's conversation. So I thank everybody for your time and to the next one. Thank you, everyone.